Ladies and gentlemen, welcome. My name is Alex Dworkin and I'm a managing partner at 40 Capital. We specialize in a very unique mathematical approach to the market where we calculate the market and individual stocks in three-dimensional space. And when we do, perfect order reveals itself. On top of that, we've developed a number of very complex timing mechanisms that we use on top of that as well. And that allows us to predict the overall stock market and individual stocks on multiple time frames. Now, I personally believe our work is nearly identical to what Jim Simmons was able to accomplish at Renaissance Technologies, if you're familiar with Jim. So our primary objective is to identify stocks that will increase in value 2x, 5x, 10x. So we're essentially looking for the next Bitcoin, Apple, Nvidia, Tesla, Microsoft, so on and so forth. And we do so by having the ability to identify very important bottoms in various stocks. And on top of that, our software has the capability to calculate what they're going to do going forward, once again, in both time and price. And when we combine all of those factors together, we're able to identify such investment opportunities. Okay? So today we're going to be looking at one of our mega cap weekly stocks that we update twice a year. Today's stock is Lilly. And just to kind of jump to the conclusion very quickly, if you don't want to watch this video in full, some of the stocks that we analyze are very clear in terms of their time and price parameters, and we know what's gonna happen with them going forward. And actually, Eli Lilly was one of those stocks going into this particular top that you see here. But subsequently, the current picture is not very clear. We know the bottom is coming. We know the bottom is going to be approximately around $400 a share, possibly $375 a share. But what comes with this is a situation where Eli Lilly is going to be, of course, we know the fundamental reasons. They recently had problems with their weight loss drug, but for the foreseeable future, the stock is going to be stuck in a trading range. So from our perspective, it is just as important to know what not to invest in as to invest in, right? So let me just very quickly share with you what our software reveals or what our calculations reveal, and then you can come to your own conclusion. So basically, the triangles you see on top and the bottom of the chart are our cycle composites. For those who are not familiar with our approach and our videos, this is a very simplistic representation of a very complex set of calculations that allow us to analyze the entire stock chart and then pull out these cyclical composites. So when you put these cyclical composites together, you get a very close representation of what the stock is going to do going forward. Okay, and that's what you see. And one important factor I forgot to mention is that the bottom composites are responsible for major bottoms in the stock, as you can see on the chart in front of you, and top composites are responsible for the tops. And there are typically multiples of them running in any given market. So I typically use Dow Jones, and Dow Jones, for example, has two composites, both upper and lower composites running at the same time. But if you put them together and you know how to, you can very closely replicate what you see here on the two-dimensional time and price chart. The lines you see here are cycle clusters, and while the composites get us very close to the actual turning point within, let's say, 1 or 2 months, depending on variance associated with them, cycle clusters will give us the exact date associated with an upcoming turning points. And the green dots you see here are the possible bottoms associated with this particular stock. So as I mentioned earlier, basically the conclusion is to stay away from this particular stock because the clarity is gone. Not necessarily, no, I shouldn't say the clarity is gone. What the stock is saying is that it's going to be stuck in a trading range for the foreseeable future, downward trending trading range, I should say, that will eventually get us to approximately $400 a share or $375 a share that will close this gap. And perhaps once we get into this period of time where we have mid-cycle bottoms, we'll begin to move. But until that happens, and if I click on this, you'll see the dates that we're talking about here. So it's going to be a couple of years at least. Let me click on this. So as you can see, it's showing June of 2028, a very long period of time. So we have 3 years of Eli Lilly going up and down without so much of a direction. Well, a directional move to the downside, but it's not going to be significant. We'll be able to close this gap, but then just kind of bounce all over the place. So in such a situation, it is best to avoid this particular stocks, because you're not going to get anything out of them. You're just going to get very frustrated with the output that you're getting. So that's it for Eli Lilly. Tomorrow is going to be a very interesting update. We're going to be looking at 10-year rate, primarily because of all of the macroeconomic forecasts and what's going on in our political environment, with President Trump trying to lower interest rates in any way possible. By the way, well, I'll save it for tomorrow. We'll talk about that particular analysis tomorrow. But in the description of this video, you'll have a couple of links very quickly. Obviously, don't forget to subscribe. But we have a link with the description to our mathematical work, where you can go down that rabbit hole, see our calculations, see our proof, and really learn about how we analyze the stock market using our three-dimensional calculations and time variables. Okay, so that's link number one. Link number two, we have a webinar coming on August 22nd. I believe last one was very successful. This one is limited to 10 people. We have a number of subscribers already. Please, if you willing to, or if you would like to subscribe to that particular webinar, do so as soon as possible. And the selling point of that one, not are we only talking about we'll go over our mathematical calculations and how we analyze stocks, but we also look at the current composition of the overall stock market. We typically shy away from that because that's our bread and butter. But in that particular forum, we'll discuss what the stock market's going to do going forward. Okay, and finally, we do have a 30-day free trial associated with our service. It's quite expensive, but for 30 days, you have no strings attached, no credit cards, nothing. All you have to do is send us an email requesting it, and if you would like to do that, the link in the description of the video as well. So that's it for today. Thank you very much for your time, and we'll be back with another update tomorrow. Bye-bye.